Okay, let's come to this agenda, market outlook 2H 2023. So let's use this session to help each other to have a better idea of how the market will move. Okay. End of the day, we are not here trying to do a prediction game. So saying that, wow, I think go up, really go up, then I'm good. Or I think up, no, like it went down, I'm lousy. No. Okay. So I think this exercise is necessary. Okay. Not so much to see how accurate we are, but help us to do this thing called portfolio allocation. Okay. Help us do this thing called portfolio allocation. So like, for example, if you are still bearish about the markets, okay, after this discussion, you're still bearish on market, then probably you want to stick more to fixed income. Now, fixed income is so good. If I'm not wrong, I heard the T-bills are actually still getting very decent returns. Or either that you can put in a fixed deposit, they're actually still giving very decent returns. Yeah, maybe you actually want to stick there. For some of you who actually think that, wow, I have endured for so long already, I learned for so long already, it's time for you to, use for fun. Sure, okay, then maybe this time around we actually get more aggressive, buying to more things this period. Okay, so this is the reason for this exercise. We don't just do it for fun. Then after that, at the end of the year, try to see whether we zun or not zun. No, that's not the whole idea, but how we actually guide us to do a portfolio allocation. Okay, that's one. Okay, number two, every one of you has a very important role to play. So end of the day, stock market is just a consolidation of individual opinion. So it doesn't matter, realistically speaking, how good or how bad the market is. It doesn't matter how good or how bad. If let's say most people think that it will be good, it's going to be good. Most people think that it's going to be bad, it's going to be bad. So what most people think is more important than actually what happens. So today, all you have a very important role because I think we have a very good sample size. If after today's session, most of you all think that market is good, I show hand already, But if most of you think that market is still bad, most of you actually still hold cash, then maybe I'll also be concerned. Okay, so please later, I don't think that I also don't know, I now put so I will ask for your individual opinion. Please share your opinion. Then I think with a consolidated opinion, it actually gives us a very good guidance of how we should deploy our funds for second half 2023. Okay. So what I am going to do is this. So basically, I'll just present the facts about the economic situation. So obviously, at every point in time, there will be some data, some stories, some news to suggest that the market will go up. At every point in time, there will be some data, some stories to suggest that the market will go down. So this is what I'll do. I present both the facts. Okay, what may cause the market to go up? What can cause the market to go down? Okay, then you have to decide with all these facts, do you think that market will eventually go up or come down? Okay, so after you all have done your prediction, then I'll share my opinions. I realize every time I share my opinions, then I influence your. So no. I will actually share my opinion after you share opinion. So that's what's going to happen. Probably the whole process is going to be 45 minutes, 1 hour. So feel free to ask me questions along the way. Okay, so before I start talking about the story, the facts, let's look at how STI has performed so far. As you can see here, is sideways market. Yeah, almost exactly sideways. I started about 3,225. This was yesterday, 3,258. So STI has actually moved sideways. So the question is, how is it going to move from here up, down, sideways? Okay, thank you so much. So Lei Hun, okay, good. Then, let's see whether everybody has the same opinion. So that's how STI has performed. Okay, I am also looking at Dow Jones. Okay, DJI stands for Dow Jones Industrial Average. Okay, I'm also looking at DJI because they are highly correlated in terms of directions. in terms of directions, they are highly correlated. That means US go up, Singapore will go up, US come down, Singapore will come down. It's just in terms of magnitude. The Dow Jones will be more. That means usually when the Dow Jones go up, they will go up more than Singapore. Dow Jones come down, they'll come down more than Singapore, or more volatile in that sense. Okay, but they are quite highly correlated. So yes, we can say that yep, US is on a slight upward trend, okay, especially over the past 1 month. Okay, but past 6 months perspective, you're actually on a slight upward trend. Now it's trading about 352. STI is about 325. Okay. Okay, I'm now going to spend maybe the next 15 minutes present the case for why market will perform well. Okay, then subsequently the next 15 minutes to present for why the market will not perform well. So what you should keep in mind here is this. So whatever news I present, number one, do you think that is going to happen? And do you think that has great impact on the markets? Okay, so this is what you should be thinking while I'll share. So I'll share this news. Then you have to ask yourself, hey, I mean, all of you have been trading for a while. This news, is it really going to happen or not? Okay, and it will the impact on the market be great. Then from there, maybe it gives you a sense of how you would decide later. Okay, why market may go well? Okay, there are some positive news. Basically, the US inflation hits 2-year low in June. So finally, the horse is being tamed. Okay, the US inflation is coming down. Okay, it's actually coming down, as you can see from this article. So what does it entail? Okay, with the US inflation coming down, that means the interest rate hike, we finally can see the end of the interest rate hike. So they were saying that, I can't remember the exact date, I think within the next 1 month, there's one more time of rate hike, then probably end of the year, one more time, then more or less, or put it this way, nobody says that when's the final rate hike, but it seems like the what do you call that, the requirement for the rate hike is getting lower and lower. Okay, so it seems like the end of rate hike may be coming. Okay, so listen carefully. We are still going to get rate higher. I think one within the next 1 month and one at the end of the year. But apparently they said that the end of rate hike may be coming. Why? Because the inflation rates are actually being tapered. A bit about the theory part, hopefully you all can remember. So this was being shared during the class. Now, how does this interest rate affect the economy and of course the stock market? So if let's say interest rate is low, it's cheaper to borrow. When it's cheaper to borrow, people buy more things. Property is a very good example. So if you talk about 2-3 years back, when interest rate was only like 1%, wow, people was buying property like crazy. It's like, wow, might as well go and buy property since it's so cheap. Okay. Companies also the same. If interest rate is low, I might as well go and buy more machines. I might as well go and do expansion. Okay. So demand increases, company produce more, they demand for more labor. Okay, demand for more labor. Then after that, there's a demand for more labor, more people get employed. Now, when more people get employed, what's going to happen? They're going to spend more money, right? I always have this joke. All of us hate money. Once we see money, we spend. So when you get more money, what do? You spend. Correct or not? I always like to share this story. When I was in NUS, I could go to Thailand for 10 days with 300 Sing dollar. Now crazy, no way I will just spend $300 on a 10-day trip. Why do I actually want to torture myself, right? So if you have more money, we'll spend more. So it will actually go into a positive loop. Okay. So economy is like cycling. It's like cycling. It always has to be in constant motion. It always can be constant motion. So basically, with the interest rate down, then you get to cycle faster. So with inflation, what is going to happen? Because of inflation rates is high, things are expensive. Okay, this is actually too fast already. Okay, people keep buying, yeah, that actually cause the demand to go up. Okay, economics 101, demand go up, price will increase. So now price has actually increased to a very scary level. Personally, I was very surprised. So I actually have a food court, you know, those below HDB type of food court near my house. By the way, I stay in just a housing estate. I don't stay in Orchard. I stay in some housing estates. I have those normal there's a food court under HDB type near my place. Now a bowl of noodle is $7. It's actually quite scary. You think about this. Can you imagine next time? Can you imagine the day let's say one day we go to food court and we have to choose certain type of food based on affordability. I'm quite sure we'll be very unhappy about it. I'm quite sure there'll be social issue. So if let's say most people actually I feel like eating meat today, but because I cannot afford, I have to eat the type of only can order 2 vegetables. It's actually quite scary. Right? I think put it very bluntly, government may lose votes. Okay, so that's why you cannot let the inflation to keep going up, cannot keep going up. So what is one way to contain the inflation is what? Okay, I increase the interest rates. Okay, I increase the interest rate is just like jamming brake on the bike, because increase interest rate, people borrow less, people buy less, and after that it go into a reverse spiral. Everything go into reverse spiral. Okay, then of course less people get employed, less people buy things, it will control the inflation rate. So hopefully this theory is okay. So of course, like I said, the reverse works too. Interest rate go up, everything go reverse. Okay, maybe I just get some feedback here. Anyone, okay, if everyone is clear about the relationship between interest rate and inflation rate, and what we call the velocity of the money velocity, how fast or how slow, okay, the economy moves. If everyone is clear, don't mind just tell me type of 1. If anybody is lost about this model, please tell me type of 0. Okay, because I talked about this a few times, but if let's say you are lost, please type of 0. Okay, of course, if there's any questions, feel free to ask. Okay, great. Thank you so much. Okay, good. So all know the relationship between interest rate, inflation, and what we call money velocity. How fast the money has been moving. Okay, so basically we have come into a state whereby the money moved too fast already. Too many people spending too much money, driving the prices up. So we actually need to increase the interest rate to reverse, to slow things down. Okay, so of course, when they slow things down, it's actually, generally speaking, bad for the economy, because you think about people buy less, company produce lesser, then they start to retrench people. Okay, less people get employed, then they buy less. Unfortunately, economy always move in spirals. Then it may actually go into a downward spiral. So that's how it works. Okay, so anyway, now that we are talking about the rate hike is going to stop, that means they will stop increasing interest rates. Okay, they will stop increasing interest rates. So the damage to the economy will be lesser. So that is a good reason for the market to go up. Okay, I just want to share some background data. So this is the inflation rate. All this you can get from trading economics. So inflation rate has come down for US. So very good. This is very good picture to see. Interest rate. So a lot of people has been asking what was the record interest rate so far. So as you can see here, the last time we hit this rate was 08 crisis. This was the 2008 Lehman Brothers crisis. We actually hit there. Okay, so 2000, that was the dot-com bust. I don't know. For those who actually know this term dot-com bust, that means you're quite old like me. Okay, so this was, we're actually back at those levels. Okay. Okay, so that's US. So China is also having some good news if you look from a certain perspective. For the past few months, their GDP growth rate has been going up, has been creeping up, as you can see. And as per what Ken has pointed out, so just very recent, is it today or yesterday? Today is 25th, right? Yeah. Today, yesterday, in fact, today, this is today's news. China is actually going to throw in some stimulus package to spur the recovery. So in fact, that's why the Chinese market, the Hong Kong market is doing well. And yes, Sukiat, thank you so much. So China finally opened the 15-day visa free for Singapore port. So yes, I would love to go and visit China soon, but I don't know whether I can afford. My wife just came back from China. He said now like 1 meal for 5 person. If you just go step into any restaurant in any of the major city like Guangzhou, Shanghai, 1 meal for 5 person easily 200 Sing dollar. So I also don't know. I still remember I was in China in 2004, or that was the best. Basically, 200 Sing, okay, 400 Sing, I can actually, no need, I think about 300 Sing, I can actually give a treat to all my colleagues, 15, 16 packs, but eat until full about 300 Sing. That was in 03, of course. Anyway, so yes, Sukiat, thanks for sharing. So I believe that may also bring some cheers to the stock market as well. Okay, the other good news that I could see is this. Of course, this is just an opinion. But I believe eventually the Ukraine war is going to end somehow. Someday, somehow it's going to end. Okay, which is going to be this semester, I don't know. Okay, so based on this article, okay, we may be seeing the end of it. Okay, so of course, this is just opinion. It can happen the other way as well. Okay, so what I have done is just to lay down what are some of the good news I think can help to spur the market. Okay, so summarize 3 main news I have pointed out. One is that the inflation is in control, and with that, the interest rate hike is going to stop. So I think there is one reason for the market to go up. Number 2 is that the China, past few months is showing some growth and they are throwing in stimulus. Number 3, maybe the Ukraine war at site can actually bring some good news. So if let's say the Ukraine war stop, so of course, number 1, that will bring cheers, world peace. And when we talk about reconstruction of Ukraine, that will actually generate a lot of jobs, a lot of activities. So they will actually start buying. Can you imagine they had to start buying a lot of building materials in bulk? And that will definitely, generate a lot of businesses for many companies around the world. Okay. China PMI, actually, I got the data. I'll show you later very soon. Anybody want to share any other good news that you think that may spur the market up? Anybody, please. Hi, unmute yourself, share. Anybody has believe that any other news that may actually spur the market up? No? All good? Okay, thank you so much. So these are all the good news that I believe may spur the market up. Now, I'm actually going to share all the news that I believe may bring the market down. Okay, so for you again, you to see lah. So some some do it very mechanically. It's like go and count lah. Only 3 good news, then got 5 bad news, then market will come down. Sure, if that's your opinion, go and do it. Of course, what I hope is, you may actually want to reflect a bit. Hey, do you think that this news will really bring the market up or bring the market down? Okay, so what are the points that I bring up? Number 1, US apparently there is still risk that is actually going to a recession. Okay, there is this risk that US going for a recession. Now, again, let me just explain the theory part first. So with the interest rate going up, right, it has actually slowed down the economy quite a bit. Okay, interest rate going up, people borrow less, people demand for less goods, company buy less, invest less. Okay, so less people get employed. Less people get employed, they actually buy less things. And unfortunately, economy always go in spiral. It's just like this is a bicycle that can never stop running. It's just a function of this bike can run faster or run slower. So now that the brakes are pressed, okay, the bikes has actually run slower. And there is a possibility that the spiral will keep continue and continue and continue. Okay, so unfortunately, that's how the economy works. It's always in spiral. When it go up, it keeps spiraling up. When it come down, it may spiral down. So, of course, if it spiral, then after that, lesser people buy things, then those companies that, oh dear, every time I produce, I cannot sell. What's going to happen? I produce even lesser. Once I produce even lesser, what's going to happen? I want to have lesser labor. Then I fire more people. Then more people get fired. They buy even less. Then you can see just go round and round and round. Okay. So, of course, if you actually continue this way, there is a chance of what we call a recession. So recession means there's a negative GDP growth for 2 quarters. 2 quarters negative GDP growth. Okay. And when they talk about these leading indicators, precisely what is it? It's basically the PMI. Okay, quick refresher. What does PMI stands for? Anyone can help me here? PMI. What does PMI stands for? See, y'all can remember or not?
Purchasing Manager Index.
Thank you so much. Purchasing Managers Index. So by the way, I look at the manufacturing one. Okay. So just in case y'all forget, everything I just got from one website. Okay. I don't know why I type the website. It doesn't pop up. I always have to go Google, then it can come up. Trading Economics. Okay, country, United States. So y'all can check it in the free time. Okay, I only look at manufacturing. So we just look at the manufacturing PMI. So this is the main benchmark we actually look at. Okay. So quick refresher. PMI is a survey done to all the procurement managers or the purchasing manager, asking them, are they going to buy more raw materials compared to the previous month? So obviously, if they're going to buy more raw materials, they're going to produce more. That means they are bullish. Things are well. If they're going to buy less material, that means they are bearish. They are going to sell lesser. Okay. Because it's a survey, they use 50 as a benchmark. If it's less than 50, means they are going to sell lesser, what we call contractionary. If it's more than 50, then it's what we call expansionary. They're going to buy more raw materials. They're going to produce more, going to sell more. And what you are seeing is the latest US manufacturing PMI numbers is less than 50. In fact, if you see carefully, it's only about 46. Okay, so this is what they mean by leading indicators. So obviously, if they are going to sell more, if they're going to produce less, they are going to earn less. Then from a national GDP perspective, okay, GDP is going to drop. It may actually go into a negative growth. Okay, so unfortunately, okay, even though that the stock market has went up, okay, this risk is actually still quite eminent. People are still talking about it. people say that, hey, by right, US should be in recession in the first half already. It's not happening yet. And there are enough analysts out there to think that the risk is actually still imminent. Okay. Europe, in fact, I would say it's worse. So based on numbers, they are already in recession. Okay, 2 quarters are falling apart. So Eurozone is already in recession. So let's look at the numbers. Okay, this is the GDP growth rate for Euro. Okay, so you can see that for the last 2 quarters. So once you have a last 2 quarters of negative growth, they are already in recession. Also, that is what recession means. Last 2 quarters of negative growth. And things are also not looking up. As you can see here, their PMI is getting lesser and lesser, and it's talking about 43. That means it's actually contractionary. Contractionary. Okay. As say, I produce less. Then after that, I may have to fire more workers, so more people get fired. And then, people buy less. And then next round, I may even have to produce lesser. So unfortunately, things move in spiral. Okay, China, this is, I think, quite recent. So apparently they believe that the China recovery. So of course, China is the last one to really open up the economy because of COVID. I think only really beginning of this year, then they start opening up, letting people visit China. So they are actually one of the last to open up. So yes, they also one of the last to experience the recovery from COVID. And it seems like they are losing momentum as per what this article suggests. So this is China PMI. So Sume, you are looking for China PMI, right? Okay. So as you can see, China PMI for quite a long time has been below 50. So February suddenly shoot up. May and June, it went above 50, but it don't look very sustainable. Don't look very sustainable. Okay, so it may suggest that, yep, as per what this article says, okay, the recovery may be losing the momentum. Okay, I just want to highlight one point here. Okay, a lot of you all actually remember say that, hey, actually I thought Emin, you always say that unemployment rate is the main thing, right? Okay, and unemployment rate all very good, right? So just be sure, unemployment rate higher better or lower better? Unemployment rate higher better or lower better?
Lower better.
Lower better. Thank you so much. So you can see, wow, US unemployment rate is at 3.6. Very good. China unemployment rate also coming down. Okay, so I would say stable or coming down. Eurozone unemployment rate, can you see, also coming down. Then why you actually say it's no good? Okay. So the point here is this, okay, low unemployment rate at this point in time, it's not helping as it fuels inflation. Now, one analogy I can give is this, think of the bicycle now is going down a down slope. Okay, going down a down slope. And because you have too many employed people, then it if let's say, for example, if you are traveling at a slow speed, right, you want to add a bit of speed, okay. But now you're already at a very fast speed, then you still want to increase the speed, that is actually going to be very dangerous. So in this case, yes, employed people are good, but this employed people now too much already is actually driving inflation. Okay, it's actually driving inflation. So unfortunately now, the more people get employed, the inflation get worse. So yeah, like I always say, it's beyond my pay grade, but all the economists, all the policy maker have always to have to balance. Too many people employed also no good. Too few people employed also no good. So it's always a right balance. It's again just like you can think of it as cycling example. If you go down slope, you go too fast, you go too slow, then you are slow. Okay, but you go too fast, you're dangerous. Okay, so now unfortunately, even the in terms of our employed, they come to a very dangerous phase. Why? Because they have the more people employed, they actually have been increasing the inflation. So my point here is this: a low unemployment rate at this time is not good because it actually fuels the inflation. Okay. Okay, any other bad news? So the bad news I pointed out is basically US may go into recession, Eurozone is already recession, China growth is not too well. Okay, so these are the three bad news. Yeah, these are three bad news. These are three bad. And of course, if you all can recall, generally speaking, for economic analysis, I just look at US, Euro, and China. Anyone can remember why I only look at these three economies? Why I only look at US, Euro, and China, and not like India, not like Japan? Anyone can remember why? Why I only look at these three? Hey, thank you so much. All these three add together, their GDP 60%. If they do well, the world do well. If they don't do well, the world don't do well. Okay, US-China tension. Yes, I thought about it. At first, I also want to put it in. So this is quite interesting. This is quite interesting. Personally, I don't think it as a big issue. One of the reason is this. Of course, this is personal. This is just opinion. Like I said, of course, I'm entitled to my own opinion. So we always talk about US, China. So if you think about it, the main thing is the Taiwan issue, right? At first, from here we read, wow, seriously, are we going to get war? Is it really that bad? I so happened that I visited China in June. Actually, nobody give a care about, or nobody give a damn about what US, China, or the men on the streets. And if you talk to someone, talk to a Taiwanese, they say that's okay. Like I have a friend who is like 50 years old. He told me since his birth, they already talk about this Taiwan war since birth. So every day they always have threat about this Taiwan war. So to them, what is happening today is nothing new. They are not worried. Okay. So this is my personal opinion about US-China tension, or at least for the next 6 months. I don't think it will get into anything serious. My opinion. Of course, it's a valid point. US-China tension. Personally, I don't think you'll get anything serious. So our world system is happier with more people jobless. So that is the thing. So I think the issue is we all should be employed, but don't spend too much money. I don't know. Like I always say, it's beyond my pay grade. So how do we come to an ideal state whereby everybody work, then economy do well? Beyond my pay grade. So maybe one day I get paid $1 million to make policy, then I can answer you. But for now, I'm sorry. I only can be a keyboard warrior, Indra. Okay, escalation of Ukraine war, that is of course a risk. That's of course a risk. I think that is a valid risk. So there are talks about nuclear threats being more serious now. So yes, and I didn't really put it in. Is personally, again, I tend not to think that's happened, but you're right, Ken. I think that it's a very valid news. Okay, climate change, I don't think, like I said, we're just looking for the next 6 months. I don't think we can feel the impact over the next 6 months. Yes, long term is definitely going to have a serious impact on us, but not the next 6 months. So that is my point of view. Oh yeah, Jin An, I was about to talk about that. Nobody cares. Political development in Singapore, nobody cares. We have seen a lot of times all the Singapore news. Okay, like I said, end of the day, so far I still see that way. The Singapore market is still correlated to the US markets. That means it's to the global economy. So whatever happened at Singapore, all the saga. Okay, I don't think I want to use this platform to gossip about. I'm quite sure you all know what the saga is. Nope, I don't think there's an impact. But Jinan, thanks for putting it up. Okay, run up to US presidential election. I'm not too sure about that, Sukit, but I think that's a good point. Thank you so much. Will that affect? Yep. Yeah, maybe, of course, it would be great if you can share more inputs. Great, great. Please keep your inputs coming in. Russian warship practice seizing the Black Sea cargo ship amid fear of escalation. Russia is threatening ships in the Black Sea in what could further escalate. Okay, thank you so much. So yes, yep, that is one bad news. Thank you so much, CSH, for sharing. Commodity prices are going up, so inflation may come back and consequent interest rate may go up. Okay, thank you so much, Robert, for sharing. Is the trade sanction going on for US and China kind of affecting the economy? China just banned some metal used in sorry, I have no further information about what you just asked. Okay, sorry about it, Pochu. Yeah. Okay, thank you so much. Anybody, any other bad news? Anybody want to share? Thanks for all the inputs. Okay. So you all have heard there are reasons for the market to go up. So just to summarize, inflation rate control, interest rate hike stopping. China seems to be, at least China has recovered. It's just that going forward, people may not think the same. And there may be a chance that Ukraine war will stop. Okay, so these are the 3 points to support market going up. Points that support market coming down, recession. Okay, recession by the 3 big nations. And of course, all the points that you are highlighted so in the chat. Okay, so with that, it's time to share your opinion. Please don't be shy. Like I always said, sometimes whatever really happened is not important. If everybody tell me the sky is red, the sky is red color. Okay, so don't belittle your opinion. So please think about it. Okay, I'm actually going to ask you about market prediction. Basically, I'm just going to ask 2 questions. Question number 1 here is this: STI now is about 3250. Where do you think on 31st December 2023 out this year, where do you think STI will be? That is question number 1. Question number 2 is this: Dow Jones now is about, I think, 35,000. Where you think Dow Jones will be at the end of the year? Okay, 31st December 2023. So I'm just going to ask these 2 questions. So take your time and to answer, and every opinion matters. So hopefully you all still remember the drill. Okay, let's see. Okay, you have 6 choices. Okay, you have 6 choices. Please take note, not 4, 6. STI 3250. What do you think STI will be on 31st December 2023? So there are 6 choices. Take your time. You got 1 minute. Slowly. This is not, no need to rush. Okay, thank you so much. Okay, so most people think that, so in fact, still quite positive. Most people think that it's actually either 3,002 to 300 or 3,003, 304. Oh, interesting. I thought most would be bearish. Okay, so not really. Let me just take a photo. Great. Interesting. Okay, I think this is a very good result. Thank you so much. Okay, so second and last question. Dow Jones is about 35,000 now. So what do you think Dow Jones will be on 31st December 2023? So the highest votes go to between 3.6 to 3. Oh, that means you are still quite bullish. Interesting. Thank you so much. Thanks. Okay, very good, very good. Thank you so much for your opinion. So happy with the results. And it's time to share my opinion. So disclaimer, this is my opinion. My opinion is not a fact. What I say may or may not happen. I have been successful. I have failed. Okay, so since you all share opinion, I think I also should share mine. Now, personally, I always think that market will always take a while to find the right balance, especially when we are talking about a spiral system. Okay, so what do I mean by take a while is, again, I just to give you an analogy, it's like finding the right temperature for your bath. You turn on the blue one too cold, you turn on red too hot, or then if you turn on too quickly, right? Wow, then after that you quickly add more cold water. Then after that the cold water you add too quickly, too cold, you have to quickly add the hot water. So only after a while, okay, then you can find the right temperature. Okay. So what I'm saying here is this, this is what the market is actually doing right now also, or economic perspective or the market perspective. We just come out from a very bad crisis, the COVID crisis. So it will actually take a while to find the equilibrium, even though, yes, you're right, we have taken a while. In fact, I would say the past 1 year is actually trying to find the right balance. So I believe that, we are going to see quite a volatility over the next 3 months. Again, quite a sideways market over the next 3 months, up, down, down, down. But personally, I am more in favor of the camp whereby I think market will go uptrend in the last quarter. I believe the US recession maybe could be avoided. This is my belief. Okay, this is my belief. Why do I have such belief? Because they talk about recession for so long already, and it's not happening. So I don't see why is it happening. So that's my belief. I can be right, I can be wrong. So that's just my opinion. And this is my prediction for year end, STI 3004, Dow Jones 3006, which is actually quite similar to most of your. Okay, so happy. Okay, good, good, good. That means most of us are in line. It's either I can read your mind or you can read my mind. Okay, great, great. Well, this is good because I haven't shared this first and asked you to poll. Okay, anybody have any questions for me on my opinion? Okay, if not, now here comes the more important part. Now, why does this exercise matters? So hopefully, at least for the next 6 months, I have actually helped you to give you some guidance of your portfolio allocation. Okay, like for example, how much money should I allocate to equities? How much cash to keep right now? Okay, so for some of you all actually like to look at it from your total investment portfolio perspective, and you're always rebalance. I know some of you do that. So let's say now you got $1 million. Okay, so maybe currently you have 70% in stocks, 30% in fixed deposit. So after this exercise, if you think that, maybe the market is going down, maybe you want to sell some of your stocks and put more in FD. Okay, so this is how you should decide. So rather than asking me, now the FD interest rate still good, shall I actually put money in FD? Okay, so it's very hard for me to answer because different people is very different. But with this background, so if you believe that market is going to drop, yes, then of course you should put more in safer product. Okay, hope you get the idea. So again, if you so especially now that putting money in money market product is actually quite good. So does it make sense to still keep your money there, or it's time for you to use all this money on equities if you believe that the market will chong up? Okay, so thank you, Hui Cheng, for sharing the T-bill rates, K 3.85. So let's say, I just want to give a clearer example. This is my example. Okay, I don't go by the whole portfolio. I go by my money savings. So if you all can recall, every month I have some money for my work that can be invested. Also 1,000, 2,000, 5,000, whatever. So every month I have some money, okay, come to me for invest. So I always ask myself, how much of my money should I be investing today? So for the first half, okay, because if you can recall, for the first half, I believe that the market is trending down. So I was quite stingy in buying stocks. So in fact, I think, yeah, the whole of first half, I only probably bought one growth stocks, if I'm not wrong. Okay. But I still do my regular investing on REITs. So some of you know I am now more active in options. So even in options, I am very careful. I am very careful. So just to give you a sense of what I mean by being careful. So maybe I use a numerical example, it's clearer. So assuming now there's actually this stock, XXX, are now trading at current price is $100, for example. Okay, price is $100. So usually I sell put option. So what does a put option do? So my put option, I can be like, for example, strike price of $90. Then expiry 2 weeks, 2 weeks time. Okay. So basically how I do is this, I actually sell puts. Okay, I sell puts, and sell puts, I collect a premium. So when I do this, so what happened here is this. So assuming that now the price is $100, I do a strike price on $90. And I expire in 2 weeks time. So at the end of expiry, if the stock price is still above $90, so let's say even the price drop, of course the price increase is going to be above 90, but even the price drop by still above $90, I make money, okay, because I actually collect the fee. Okay, I sell puts, I collect a premium, I collect a fee. Okay, but if let's say the price drop below $90, I need to fork out the money, $90, to go and buy the underlying stocks. That's what sell put means. So when I actually sit here, I very short-term in nature, I try to avoid stocks. So basically, I'm very careful. I generally only buy, I sell puts only when I have about 10% premium, and like in this case, I have a 10% buffer. So it's actually not very lucrative. So number one, my premium is very low. Okay, so maximum I actually getting is only about a $1 premium. Number two, yes, my expiry can be very long. So sometimes can go up to 6 weeks. 6 weeks. So I'm very careful. So in that sense that the worst case is I take 6 weeks to make $100. Okay, so that was my option strategy for the first half, because I am bearish. I don't want to get a sign, so I be super careful. Also, that is what I mean here. Okay, if anyone have questions, of course, maybe we can stay back and discuss later. Okay. Now, coming back to here. So basically, first half, I am on 50% invested, 50% cash. So assuming that, let's say March, I have 5,000 for investment. So what I do is 2,005, I put inside bank account. Okay, I'm not a fan of fixed income. I think for those who ever know me long enough, you know, I never buy bonds. I don't put money in T-bills. People ask me T-bills 3.85 good or not. I say my risk give me 6%, right? You know. Okay, so no right or wrong. Okay, I'm happy with the REITs that can take me. So of course, from the risk adjusted basis, yeah, maybe a T-bill is good. Okay, but anyway, to each his own. So the other 50% I've been keeping in cash. I have only invested 50% and predominantly in my regular saving portfolio. Okay, in REITs. So for my second half, as you can see, I have turned bullish. I think STI will go up, Dow Jones will go up. I am actually going to increase my money investment amount to 70%. And I'm actually going to take higher risk with options. So like, for example, now my options are, I can do things like strike price $95. Because I have higher strike, my expiry can be quite low. Expiry date can be like 2 weeks. So I can make money faster. But of course, by doing this, the risk of me owning the stock is higher. Okay? But then I don't mind because I am bullish. Whole stock is okay. I believe the market will go up. Okay, so hopefully I give you an example of what all this exercise entails. What is it for? So personally, with this exercise, I have decided that for second half, I'm going to ramp up my investment in equities. I'm going to use more of my money to invest. Okay, compared to 6 months, compared to my first half, and I am willing to take higher risk. Okay, if you are like me, first half 2020-2023, and if you think that second half is going to be worse, it's going to drop further, hey, then maybe you want to think that instead of investing 50%, maybe you want to invest in 30%. No right or wrong. No right or wrong. So this exercise is just to help you to make this decision.